What is up, guys? Welcome back to the channel. My name is Kevin Svenson, and today we're going to be discussing the price of Bitcoin. So it is February 22nd. About 8 hours ago, Bitcoin was looking quite bullish. We were on the verge of a breakout. We were on the verge of a break above the 21-day EMA, which historically is really good at identifying trend shifts. We were basically about to break it. And then unfortunately, Putin, basically said that the Russian nuclear deterrent forces should be on high alert. So Putin's talking about nukes, caused some fear. Market dipped, starting exactly when that news came out. Clearly, that was the cause of the rejection off the 21-day EMA. So that is, unfortunate, but that is the situation we are in. The global situation seems possibly a little bit more uncertain now, right? A little bit more uncertain. And there's a few key concepts that I want to discuss in this video. So we were talking about the 21-day EMA, great for identifying short-term, medium-term trend shifts. And so, at the time of making this post or this tweet, we were touching it, right? We were touching it, and now we've rejected it. So now we've actually pulled back here. This is the hourly chart. Couple concepts aside from that is what I talked about in my last video, the 50-week SMA. Each major downtrend or each major macro downtrend, aka bear market, begins with the signal is a break below the 50-week SMA for bear market continuation. So 2014, we got that bear market. 2018 got that continued downtrend. 2022, well, we do have it, guys. We do have that signal. Technically, it is there, right? You can't ignore it. It's on the chart. So we have to have that in mind. Another key thing that I brought up yesterday on Twitter was that after the 2012 halving, when we got into 2014, when we broke the 50-week SMA, it was 616 days in, okay? 2016 halving bull cycle. 693 days in, we break the 50-week SMA, enter a bear market. 2020 halving cycle, 609 days, we break the 50-week SMA. Are we confirmed for a bear market right now? Well, not yet. Not yet. Bitcoin is still in a position of higher lows, of macro higher lows. But I mean, if we do break down below about 33,000 from here, well, that's a macro lower low. That is lower lows on the macro scale alongside some very signature key, historic bear market signals. One thing I want you guys to notice about Bitcoin and what the difference between the bull markets and bear markets essentially is once you get these macro horizontal support breaks after breaking the 50-week, that is when you start to get a much more bearish market. And if you're looking here for Bitcoin on the top right, we still have higher lows. So we are still in a macro higher low structure until we actually, are in a lower low structure. But if we did end up breaking below 33,000 and heading towards 30, well, the truth is every time we hit those horizontal supports after a major run, well, and if we're below the 50-week, I mean, that kind of just spells a major downtrend, a bear market, or a possible bear market continuation. Now, how could we avoid this? Well, one, it would be breaking above the 21-day EMA, which we currently rejected, right? We actually rejected it right there. If we got above that, that'd be a good short-term bullish signal. And what I would be looking for to avoid the bearish scenario would be a break above this 50-week. If we ended up bouncing from here and breaking above the 50-week, then we could say, all right, bear market avoided, right? But currently, we're sitting in a position that's, we're pretty much right in the middle, guys. When you're below the 50-week and you're testing those horizontal supports, here, 2018 over here, where we are now, coming up on those horizontals, well, you're pretty close to confirming a major downtrend. Historically, that is just how this goes. Now, one thing I'll say is that past performance does not guarantee future results. And trying to time this Bitcoin bull market top using previous performance did not work this time around. So the one counter argument to everything I'm saying right now is that, well, extrapolating the previous bull markets to this one didn't really give us good guidance on where the top was going to come in. We had like a double top here, which is unlike all other cycles. So you could say, well, since this cycle is different, maybe this signal won't be reliable or whatever. Sure, you could say that, but I just want to give you guys a fair warning that because the global situation is a little bit unstable and we're clearly coming up on this very, very similar setup to the beginning of all other bear markets, definitely approach the market here with some caution. With some caution. Seems like, well, any little news story, or well, not little, anything these leaders, these dictators, or these politicians are saying can cause market reactions, right? It's a very fragile situation right now. It's pretty difficult to be totally confident that this is the bottom. I have to say, it's kind of difficult to be like calling the bottom here. I mean, anything can happen, guys. Yeah, so the setup for a possible downtrend is here. Fair warning. That's it, guys. If you enjoyed, hit the like button, subscribe to this channel. Hope you enjoyed, and I'll see you all in the next one.